Good evening, everyone. Tonight I will be going over dollar index and Nasdaq. Last week I had some network issues. They have been resolved, and I noticed I couldn't really tell anything relevant on ES because ES has been going pretty much sideways on a higher time frame. Not really clear for me what to do. It's a little bit more clear for me on Nasdaq. So I will be talking on Nasdaq tonight and DXY. So a little recap from last time that I covered DXY. Mentioned this gap on the dollar index. We hit it first time, rejection. Almost hit it again, rejection. Came back inside it, rejection. Another time, rejection. Then we had another run up, pretty much blew past it, and then we rejected from this bearish order block. And from there on out, DXY is just continuing its trend down. It's very, very, very weak at the moment. No strength at all. And on a higher time frame, in my eyes, doesn't really look any good. And particularly at where we are now. So we filled this entire gap, also on the daily. We had a very nice run up, and then it gave it all back. So we filled this entire gap. We went back inside this volume imbalance, traded through it, got a reaction from it. The only thing that would indicate something bullish for me right now is that we have a swing low on the daily. We traded above it, so it's confirmed swing low and a change of direction. But if you see this wick and you take a 50% of it, it almost touched the 50% of this wick, this daily wick, but we came back inside this volume imbalance. So where some things aligned with the higher time frames, pretty much filled the 50% of that volume imbalance again, and we gave it all back. So DXY is still weak. Seasonal tendency wise, it will be weak until May, probably, where we see a shift. I'm really focusing on this low right now. As I've mentioned in the last update, I believe this will be a breakaway gap for now. And we are going to dig a little bit deeper inside this fair value gap on the monthly. And then I'm focused on the 50% of that gap right now, especially since DXY has been very weak. That's my phone, excuse me. So I'm interested in this because it's the middle of the monthly fair value gap. It's near 100-point psychological level. And it would take out a significant low. And it would pretty much rebalance this area of only buy side liquidity that has been delivered. And then it will be interesting to see if the dollar can find some strength, because it's just weak. I mean, we got a very nice run up, very nice retracement. What I was hoping for DXY a while back already, back in January, is that we would see something like a street rise pattern and then a push up back in this gap. And initially, I was thinking it would happen with this rise up, but we pretty much only took out this swing high on the daily, and we got a shift in market structure on the lower time frames, on the 1 hour, the 4 hour, and since then it's basically just giving it all back. So right now on the weekly, we are in this rejection block, or well, it's outside of the rejection block, but we have an inversed fair value gap, and you could say that's a balanced price range by now. And it has not even got any close to go above it and stay above it. It just taps inside it, rejection, finds a little bit of support, broke down, so we close below it, which is bearish, and then another tap up, rejection, and close lower. So we have 3 days left, and the rest of the week will be on high impact news as well. I believe tomorrow we have CPI. Let me check very quickly. Yeah, so tomorrow we have CPI at 8:30 New York time. Then later in the evening we have also FOMC meeting minutes, just a meeting. And Thursday we have core PPI and unemployment claims and something related to the 30-year bond auction from the US dollar. And on Friday we have core retail, FOMC member speaking, prelim, consumer sentiment. So we have quite a few high impactful news drivers for the remaining of this week. And I think that's a good reflection of what we have seen so far during this week. So if we take a close look at Nasdaq, for example, today has been pretty annoying. So we pretty much started the day with very nice volatility, making a Monday range. During London, we had a nice run up, what we expecting. So we had a nice power of 3 setup with New York midnight over here. Got an initial run down, initial run up, came back inside this fair value gap, rejected, power of 3 setup, very volatile move until the opening bell in New York, and then it all recovered back, creating a Monday low and a Monday high. Then today we had, during London, we took out the New York high, and we pretty much started everything all over again. With New York midnight, we had a little run down, huge run up during the London open kill zone, and since London it has been going down. And then when New York opened today, we just made a lot of choppiness, sloppy price action, which is expected, of course, since CPI is tomorrow, and every day before CPI or FOMC or any high impactful news drivers like those have the same characteristics as we've seen today. And during the final hour, we got some nice volatility. Very nice. So locally, we got this high taken, little high, swing high. Then this swing low got broken, so a shift in market structure. You look for a fair value gap, boom, and you can target these lows. These lows have been cleaned. Next targets would be these lows. Just the local lows from earlier today during 1 or 11 a.m. till noon. So last hour has pretty nice price action compared to what we've seen today so far. Just low resistance liquidity runs. I want to focus on the higher time frame on Nasdaq, since for me it's pretty obvious that Nasdaq is trying to go higher for now. And if we compare it with ES, and I'll go over to NQ1 and ES1, because those have a little bit more data. So we currently have a SMT divergence between the two indexes. So Nasdaq made a higher high while ES remains to have a lower high. And then the Dow, I believe, made another high again. Let's see what Dow did. So here the Dow already made a higher high. The other two made lower highs. And then in the end, Nasdaq grabbed those highs. And I believe for ES that this is going to be a drawn liquidity now as well, since it already made this whole move, changed market structure to bearish or bullish, I mean, went back inside this gap, and now it's just, it looks like a retracement and then waiting for continuation further up. So I'm expecting another run up for ES as a drawn liquidity because nothing has been bearish so far. And then I'm curious to see if the Dow is able to go for this high or this high or not. If it doesn't, then we could say we have a quarterly shift perhaps, since there are not really any changes in divergences over here. We got a little one, but the most obvious would be this high for ES, of course. So let's see what we can expect for Nasdaq. Because Nasdaq has been running very wild. So the movement of Nasdaq is way better, in my opinion, than ES currently is. And that's why I like to trade it. So if we look up over here, when we go a little bit back in time, back to August last year, you can see a couple things. First is this bearish order block that we pretty much already hit, almost to 50% of this order block. We still have this little volume gap over here, and we have this STIBI, this bearish fair value gap. So I think that's a potential drawn liquidity for Nasdaq. And so far, the only thing it has done is it went back inside this bullish fair value gap. If we take a PD array from that low to that high, 50% is over here. This fair value gap is still in premium, but if you look closer to the wicks have tapped in discount. So that's good enough. It doesn't really have to do anything more. And we didn't take out previous week low yesterday. Got a it's still intact. And I'm expecting another run up for Nasdaq to go in here. Because it looks like a bear or a bull flag. You know? Same thing that we see over here. We have a nice run up, retracement down, continuation. Nice run up, retracement down, continuation. Another rise up, retracement, continuation. That's just obvious at this point. And then I think this daily fair value gap is going to be the drawn liquidity for Nasdaq. If it runs way more higher, then of course this high will be a drawn liquidity potentially. The first thing I would look for is this fair value gap. And we got a little volume imbalance there as well. So I'll mark these down. And should we not go for this imbalance over here on Nasdaq, and we actually start to go way lower, then I'm curious to see as a first indication, at least, because we did take buy side liquidity over here. We had relative equal highs on Nasdaq on the continuous contract. I'm curious to see, since this has been respected so far, if we close daily candle bodies below it, go back inside this gap, retrace higher, and then watch if we are rejecting from this. And that would mean it would be in a balanced price range or an inverse fair value gap, the inversion of a fair value gap. And that's pretty similar to, let's say, a support and resistance flip. So first it supported price action, then it broke through, closed below it. And then if we see a retracement inside this gap and it rejects, then we would say this is an inverted fair value gap. So the inversion of a normal fair value gap. So broken, flipped into resistance, and then we can expect further continuation down. And then my first drawn liquidity would obviously be this swing low. That's the most obvious one. Then we still have this daily fair value gap, a little part unfilled. So this is the original one, but we already tapped inside it, so I'm interested in the unfilled part. And that's an imbalance below sell side liquidity. And why is this now sell side liquidity? Because we took buy side liquidity already. So everyone that's going long and long and long, they are trailing their stop losses. So first they place them here, then they place them here, then here. Then we got a swing low, they place them here. Then we got another run up, equal highs. Little retracement, maybe a little reload for smart money. Then another run up, they trailed their stop losses. So where is liquidity? That low. That's the first obvious significant swing low. And then I will be targeting, of course, this gap. And we got this wick, an old wick. That's also inside this unfilled part. And I'm interested in that 50% level of that wick. And why I'm interested in that wick, because that's a swing high, and that swing high got broken. So that was the first higher time frame shift in market structure. We got an initial low that created a swing low. We got an initial short-term high that created a swing high. Short-term low got swept, so we got a liquidity purge. Then we got a run up higher. This is the first higher time frame swing high on the daily. That one got broken on displacement. So this is a broken swing high, and from with broken swing highs, I'm always interested in the 50% of that wick. So 12429.5. Constant encroachment. And still, if Nasdaq is going to do this first and then go for that daily fair value gap, nothing is bearish still. Even though we took buy side liquidity, we shifted market structure locally, but it needs to break these lows pretty much to even think about this. And if we then take a PD array, this is the 50%, and this is the first fair value gap that you see in discount. So that's the first thing that I'm looking for. And I'm interested in that 50% of that wick, pretty much. But that will be my bearish scenario on the Nasdaq currently. But it needs to break these lows, and it needs to close below this fair value gap. Even below this one, preferably. But this is the first step as a first indication. Would have a tail swing. But right now, this candle from the 4th last week, Tuesday, that's also a swing high. So that's like a real first indication. When you see a swing high or you see a swing low forming, you need to look at 2, 3, maybe 4 days after to see if it trades above it or below it. Well, clearly it has traded below it. So it's a confirmed swing high. It has traded below it multiple times. So that's the first indication. And then my second indication for a more bearish scenario would be to break this fair value gap, make it an inversion of the fair value gap, like a support and resistance flip, like maybe set this order block, retrace back in this fair value gap, and then continuation further down. Taking out sell side liquidity, rebalancing the unfilled part of this fair value gap on the daily, and then make another move up higher for that I think this would be a preferred scenario for me at least, but it's also very dependent on this week, as we have the next 3 weeks have a lot of high impactful news, so there will certainly be a direction in the trend, but for now it's nothing too bearish. I mean, it's hovering a little bit around, but that's normal, just reaccumulating positions most likely. Either we see a breakdown closing below it, that's the first indication for it being bearish, or we see a break up, that's an indication of a reaccumulation of long positions, ready to go for a efficiently delivered sell side imbalance, buy side inefficiency gap, which would also trade back in this weekly, this daily volume imbalance. That's like a magnet. It's an extra magnet for price to reach back for. But I think this would be a preferred scenario for me. And if it really wants to run higher, then ultimately that swing high from last August, last year is a good draw on liquidity. And then we would have something of a tree rise as well. That's why I really like it. Maybe we have a little snap lower, like just a wick, going back on this old order block. And then a quick snap back, closing inside of this gap. Then see a shift in structure on the 1 hour or the 4 hour, and then look for higher targets. That's the first thing I'm looking right now for more the next few weeks. So higher time frame view. Then I want to know all my levels that I should be looking for. So price already traded in this monthly rejection block. And of course I want to know the 50% of that wick, that is 13,687.75. And that daily fair value gap is exactly at the equilibrium of this rejection block. So that's always nice to see. Then we have a previous month high, previous month low. The equilibrium of that is 12,559, and bear in mind I'm using the continuous contract, so NQ1 exclamation mark, not the NQM right now. So I want to know a little bit more about the history data, historical data. So that's going to be previous month's equilibrium. And then the monthly open is over here. We got our weekly levels with the high, low, open, and equilibrium. Let's see, 13,151. I'm not going to include the daily levels, it's a little bit irrelevant for me right now. So what I would like is a little bit further, a purge further in buy side liquidity resting above these highs to see a little bit better manipulation above previous month high. Which is either through this scenario or we are just going to hold this fair value gap and we expect another run up higher. Perhaps only with a volume imbalance. Then we can have a nice monthly power of 3 setup. And then maybe go for the previous month low. That would be something. Then let's have a look at some higher time frame levels in the past. Where is the liquidity? Right now, we had a swing low, we had a swing high, swing low got taken, so sell side has been taken. Naturally, we would like to see buy side to be taken. This high is obviously a drawn liquidity on the higher time frame, on a institutional level. And we still have this huge range, and I see it pretty much as a singular gap, especially if you are going on the 3 months, and it's a little bit more obvious. So we went back inside this gap on the 3-month time frame. We still have a smaller one over here. And then in between this high, yeah, a little small, well, a small one over here, but we still have another one over here, which is a little bit further in discount, seen from this low to that high. That's our long-term PD array. So we have a long-term one, we have an intermediate term one, because it's also a swing low. And then we got a short-term one, or a short-term one over here. We have a couple PD arrays. First one's obviously at wick that I like. Same reason on the lower time frames on the daily. Got a swing high, broken on displacement, never revisited. Curious to see what that will bring once it revisits that, if it revisits that at all, because we don't know that, of course. Nine, 6, 7, 1. We got relative equal lows. That's also a drawn liquidity. Should we go further down and target previous month low even. That's the monthly for me that I'm interested in. The rest, we got an order block over here. Want to know the 50% of that one. That's 14,923. That's the mean threshold. CE, whatever you like to call it. Then let's see on the weekly. So on the weekly, we still have this unfilled part. That's pretty much the same as on the daily. Then over here, we have also a little unfilled, little part. That one. We got one over here as well. Bearish order block. Why a bearish order block? Last up close candle, huge price swing down, bearish order block. Weekly unfilled. There, gap. We have a weekly, the same as the daily. What do we see? More local. Probably a propulsion block, so I want to know the closing price and the mean thresholds. Well-defined body, so I'm not going to be cherry picking on the wicks. We have a little volume imbalance over here as well on the weekly. We also have one over there, so high. Sell side liquidity, swing low. Sell side liquidity, relative equal lows. And if we push a little bit further down, we have this old volume imbalance and this fair value gap. I would say that's also a inversion of a fair value gap. I'll take the volume imbalance part with it, which is basically below the lows. So that's likely a drawn liquidity should we go way lower, in my opinion. And I almost forgot. We got a little gap over there as well. So these are my weekly levels for now that I'm interested in, and see what type of reaction we get from it. And then we still have the daily one. I would almost say this is just one massive bear flag. Just a one-to-one. That's 14K. Exact almost. So yeah, that's something that I'm looking for on Nasdaq. So we already had the one-to-one from this. Do we have anything aligned? So our monthly order block starts at the negative golden pocket. It's an extended one. Pretty much the same. What if I only do part of the range? Still got a little gap over there. Got some equal highs over here, so that's a potential draw on liquidity. We obviously got this high as a draw on liquidity as well. This are also our initial sales liquidity that has been taken already. Gonna run up, sell side taken, shift in structure, bullish price action. And now we are awaiting if we can make it up till there on the daily. So we got a weekly order block starting at a daily bearish fair value gap. Always nice. And this part is an unfilled weekly fair value gap, which is also inside a daily fair value gap. And the midpoint is pretty much filling the weekly. So that's two very good potential drawn liquidities. So we have a swing high drawn liquidity. Everyone shorting has been trading the stop losses. Pretty much still here, the stop losses has been hit. And we still have these two left. The last remaining part of retail. Then we have an imbalance above liquidity. And why is buy side liquidity? Why is targeting that? Because we already took sell side liquidity. And everybody trailing the stop losses or is going short and not taking profits. They want to get out eventually and they have to buy back what they sold. Same goes for here, for this larger price run, pretty much. I think I would believe that people that went short over here in April last year, have trailed their stop losses also to this high. And people that went short over here in August last year have been trailing their stop losses going lower. And I think those have already been hit, but I don't think from the players over here. But this is a very nice viewpoint of a draw on liquidity on the daily. Then where I'm interested in the volume gap, of course. This busy has my interest. Currently, this gap has my interest. We got a bullish order block over there. Still have the rejection block. Might give us a scalp trade at the very least. And I want to know the 50% of that one. Sits at 1269 1.25. Then up here we have, of course, that fair value gap fill. Still have the bearish order block as well. Bearish order block, full price swing down. Then looking a little bit more lower, then we have an unfilled part over here. Acting as a breakaway gap. That last part, we moved away from it, we came back, again just inside this rejection block, another pump up, so this is still intact. What else do we see? Nothing very interesting. Rejection block. Those are my daily levels. So our weekly volume imbalance is pretty much the 50% of this wick on the daily. That's nice. And we have a weekly order block starting in this unfilled part on the daily. It's nice. Rejection block starts here on a monthly. The mean threshold of a weekly order block is almost at the 50% of that wick. So good things aligned, good things aligned. Let's have a closer look at the more local time frames. So yeah, right now it's not really doing anything significant, just consolidating, nothing more, nothing less. That's a new week opening gap. also have a new week opening gap from this week. Somewhere over here. So that closing price and that opening price, that's on new week opening gap. It's a new week opening gap, rejection down, came back above it, below it, respecting, back tested. And during the final hour, we took out this low as well, but we left this one intact still. So we pretty much filled this entire gap. Mitigation block. People going short, thinking it goes lower. React going higher, coming back, mitigating those positions. We went a little bit more higher, and then we came back inside this SIBI today. And then we went to the 50% of that wick. No single candle body closed above it, so bearish indication normally. And we got a rejection during the final hour. So very nice volatility on Nasdaq. If I look a little bit more local right now, I would say this looks a little bit too clean. So that might be a nice target for tomorrow during CPI in the first hour, 30 minutes. That's a potential draw on liquidity. This high got taken, but that high, which is relative to these, and these are pretty smooth. I'm going to mark this one down as my draw on liquidity. These are relative equal. Not really counting this. This is more an obvious one. Like this is an obvious one. This is an obvious one. That's an obvious one. That's an obvious one. That's an obvious one. You get it? And then we have a new week opening gap there. We should also have one a little bit lower. We should have one over here. There. So Friday closing price, Sunday open price. So we have two new week opening gaps, previous new week opening gaps. This one has not really been respected that much, but it found resistance around that gap, broke through it, ran away from it, never revisited back. And I see this a little bit more like a power of three setup with your accumulation range, manipulation either side, and then distribution attacking opposing liquidity. So if we are manipulating for buy side first, during the distribution phase, we look for sell side liquidity to be taken. I think this will all depend on tomorrow, really, with the CPI and Thursday core PPI unemployment, a G20 meeting as well, all day. Tomorrow we also have a G20 meeting, and a G20 meeting is related to finance ministers and central banks from 20 industrialized nations, including the G7 nations, Canada, Italy, France, Germany, Japan, the UK, and the US. So quite an influential global policy making organ. And that's why it's going to be very volatile. Whatever the outcome is, expect the unexpected. Normally, if news is bullish, we see bearish reaction. If news is bearish, we see a bullish reaction. So the outcome is irrelevant. It's about the news drivers itself, like a CPI or a PPI or sentiment from consumers. But yeah, what all I have to say on Nasdaq locally is that it's consolidating and it's waiting for tomorrow and the rest of the week to act on its weekly range that it wants to form. So we started Monday making a low. We got currently a Tuesday high, and we are back inside that range pretty much. But I also have to say we got Monday high taken. First thing I'm looking for is to take Monday low tomorrow. Do we have something interesting? So we also have this daily order block. What's it like on the 4 hours? Let's see. Hmm. 4 hours, not really that interesting. Yeah, so that might be a nice one for a lower. The thing is, if CPI hits tomorrow and price is really going down very fast and it just taps the order block and then snaps back, like closing above the gray box, that's the daily fair value gap, I would say that's still bullish. And then I would suggest that this was an accumulation phase, that CPI news release was a manipulation event, cleaning out the relative equal lows. And then making something of a bearish Judas swing, cleaning the lows, then cleaning the highs, then going lower. Or cleaning the lows, cleaning the highs, continue going higher. As we still have that strong liquidity up side as well. That's Nasdaq. So I would like this very much, very much, because we would clean the swing, the relative equal lows. We would tap an order block. We got a retracement inversion of a fair value gap, so the support resistance flap. Then we clean these lows. We fill this unfilled part. Retest an old high, the 50% of that high. Then find support at reclaiming the order block or at least daily rejection block, and then return higher for that fair value gap on the daily. I think that would be a nice price swing to get that pre-price pattern on a higher time frame. Then let's have a look at the dollar. So yeah, first we got that low. And now we see something like a rejection coming into play. What's the equivalent for a euro? So euro went already back in the above the 50% of this huge wick. Pretty much that one. So euro is very strong. Euro is something that's very strong at the moment. Went back inside this rejection block, tapped it, and straight above. And now we are most likely printing a swing low again on the euro. So euro has a drawn liquidity there, relative equal highs. We do have a potential drawn liquidity now here with not fully relative equal, but slightly. We have a rejection block over there, so that's a discount array. Buy side, sell side. So what euro did, relative equal highs. Ran the buy side, was waiting for a swing low to form on the 4 hour. We already got displacement, but that's not really bearish per se. We got this little block over here that we hovered around, and we came back, pushed above, came back in this gap. Then the swing low was formed, and we had a previous swing low over there. Little snap, it's called a sweep. Then we got the real displacement. There's a shift in structure at least. And then we broke down, we came back inside this gap, and we returned to the previous highs that made that gap. So now the question is, are we going to go for this and then going up? So if I look at this, already looks like almost. This high was not higher than that high, so that was a lower high. Do we have any SMT divergences? So we do have an SMT divergence currently. Because these lows on the dollar are still intact, while euro has already taken out these highs. There's a slight S&T divergence between the two. No SMT between those. It's all good. Low got taken. That's another SMT divergence. That high. Taken. So normally if this would be a lower low, that would be a higher high. But we got a lower high, so that's a divergence. Same over here. Higher low, higher high. Should really be a lower high if there was no divergence. So we do have a little divergence in play between the two currencies. Drawn liquidity, that high, that low, that low, equal lows. Drawn liquidity to the upside, that high, that high. These are relatively equal highs, so I'm just going to mark that one. Feels a bit redundant otherwise. So for me, if dollar is going to be at least a little bit stronger, I want to see those highs get taken on displacement like this and this. That's something I would really like to see. But right now, we're still rejecting from the old gap, which is also a bearish order block. Coincidence maybe, but nothing too bright on dollar. So I would like to see the reaction from taking this low on the dollar index, then returning for the highs, going a little bit deeper in this order block, purging the buy side from this swing high, and see if there is any strength at all in dollar. Because like I've said, it's just weak. Very, very weak. And very difficult to read in terms of in the markets analysis between risk off, risk on ES, Nasdaq, the Dow, the dollar index, the euro. If you don't really have that tight connection between multiple assets, then it's a very tough environment to trade in. And it pretty much feels like gambling sometimes. Because if you are seeing that the dollar is pumping and then all of a sudden the Nasdaq is going to pump and ES is going to pump and then the Dow is going to dump out of nowhere, and nobody understands that. So the markets are really clueless, really fickle, very, very disturbing, very tough environment to read. And it has been easier, and I hope it's going to be easier as well in the future. Yeah, this is my drawn liquidity as what I see so far. And ultimately the low over here. We do have a little gap over here still. That we have not hit on the 4 hour. And we looks like we have a breakaway gap over here. And the one thing I like about breakaway gaps is they are meant to be filled whenever price has reached a certain point lower or higher. So from this on out, it went lower. It took out sell side liquidity, resting below that low, that low. Now we are awaiting if we see a shift in structure. And for me, this is a first indication, but I would really like to see those lows to be broken. So we have a clear and sound shift in structure, pretty much. Now we do have this breakaway gap originally. That might also be a draw on liquidity. This is more in the middle. Little distinction between what they are, where they are. So we have 3 sell side liquidity points, we have 3 buy side liquidity points, we have a fair value gap above, we have a fair value gap below, we have the overall low. And that's what I'm going to be monitoring this week on DXY. And I'm curious to see what the actual standard deviation is from the last swing point created this whole move down. So we missed that one. So pretty close to the 1-to-1 and 2 standard deviations. Two and a half as well. And we have OT, and then extended -2 is also there. That low has already been broken. So we have quite a few targets at around 100.6, give or take, which is also mean threshold from the bullish order block. And it fills out the gap over here. That's why I really like to take that low at least to have a little deep approach in that monthly fair value gap. So let's see, more local. We go a little bit more local. It's just one pump after another, and then sell off pretty much, giving everything back. It's the same thing every single time. Same over here, here, lower, high, lower, high, lower, pump, lower, pump, lower, pump, lower. It's like it's not like it just doesn't want to or it can't. It's not allowed to go higher. So yeah, we will see what it brings tomorrow. A little bit shorter on DXY because DXY has not really been changed much over the past weeks, except for that gap part that I mentioned, and then we got another run and then another sell off. So same old, just wrecking the longs, the shorts, up and down, up and down. But still, the higher time frame trend is bearish. The order flow is bearish on an institutional level. The strengths really are in the selling pressure, I would say. Quick, strong pumps, slow, high resistance, grinds down, and still taking sell side liquidity each time. That's weakness. That's not what we like to see on dollar. And then for Nasdaq tomorrow, let's have a look at the 15 minutes. What's obvious on the 15 minutes? Okay, so we have a gap over here on 50 minutes. That's an obvious one. These lows are now too smooth. These lows are smooth. These highs are smooth. Bearish order block. So we will see tomorrow, but these are the first things that really scream at me for mark me down. First levels I would watch. But ultimately we got the buy side liquidity as well. So this is the first thing I would look for going into tomorrow. Because it's pretty much 50-50. I don't know what's going to happen. It's always a guessing game. But normally CPIs are, they have a first move, that's a fake move, and then they have the second move, that's the actual move. So first we are going to see either a liquidity grab or a fake out, or a failed swing. And then we see the actual move from CPI. And I really hope it's going to be a trending move, not a consolidation move. just to give a direction, you know, it's been going up, but it's been going so slow, so heavily. It's not something what we would like to see, especially not from what we used to back in pre-summer last year. I mean, the trading environment was amazing. I hope we get a little spiced up end of the week. And that's it for me today. So a little recap. This is what I would look for going into tomorrow. I believe Asia is not really going to do anything, and I think London is going to wait for New York. So we might see a little seek and destroy during London, going for the highs, going for the lows, going for the highs, going for the lows. Then New York opens or the news gets released, and then we see a sudden move up or down. That's CPI normally. So this is what I would look for on the 50 minutes when I'm waking up tomorrow and I'm waiting for the news, and then see what happens. And we have a few new week opening gaps. That we might want to revisit. So 50-minute order block is also new week opening gap equilibrium. Always nice. Yeah, so we got reason to go higher or go lower to seek for fair value. Previous month, previous week, that's that's not that difficult. Let's see where we are going to get our manipulation, because this is clearly consolidation, just accumulating positions. But for what direction, we don't know yet. And quite a lot of monthly levels. Those are the levels that I would be watching on a monthly, on the very long time frame. And my weekly levels that I'm interested in, just waiting till they get hit and then see further what it will do. Nothing more, nothing less. Same for daily. Currently just hovering around, making something of a bull flag and then another pump up. That's what I'm expecting, unless we see daily candle closing body closes below that fair value gap. So that's what I'm expecting. I'm expecting still to run up, at least in this volume imbalance, which is also the start of that SIBI, the bearish fair value gap. And if it really runs on steam, then we have these potential drawn liquidities to the upside. So yeah, although I'm expecting that run up, I'm also cautious for this scenario. Which would be a very common scenario when you have an uptrend. You create an initial high, like over here. You create an initial high, then you have a little retracement lower, creating a short-term low. Then you have a run up, manipulating above the old high over here. Then a run down. So we first induce long positions. They are just filling smart money short positions. Same happens over here, but then the other way around. Smart money is here selling. They are buying back, taking profits, accumulating long positions on the sell stops, resting below a short-term low. The smart money is here taking profits and buying retail is here going short. Pretty much that's what happens. And then you have another pump up higher. That's like what we saw in Bitcoin. Pretty much. Same type of price action. Exact same type of price action. We made a run up, short-term low, we run the highs, we run the lows, pump up. That's something very well known, at least for me. I see that quite a lot on lower time frames, especially. But as you know, price is fractal, so we also see it on higher time frames, but it takes a little bit longer to print. And now the question is this going to be our power of 3? Who knows? I think we will get the answer tomorrow. At least the start of the answer tomorrow. So let's see and wait. And that's going to be my update on the Nasdaq and DXY, what I'm expecting, what I'm looking for. Nothing spectacular, but I already know without even looking at it, when the news hits, it's just one straight candle up, one straight candle down. I don't know which side. I really don't know. And that's not up to me. I'm not trading till at least 10 a.m. New York time. So the dust is a little bit settled and everything is, give or take, back to normal. So yeah, if you're interested in this, just take it over and see what happens during Asia tomorrow, London or New York. And the same goes for Nasdaq. So I thank you guys for your time, and I'll see you guys Friday in my last stream before my break, and then I'll be talking about crude oil, because oil made some interesting moves and they screwed a little quite a few things with what I was expecting. So when I made my recording of crude oil, I was still here. Then 2 hours later, Sunday happened, news was released, and markets get quite a few percentage up. So the power of 3 is still in play. That's good. And then we will see what happens next, because crude oil has not really done anything significant so far, and that's why I picked crude oil for Friday to see what happens when they release all the news for this week. But that will be Friday, and I thank you guys for your time, and I hope you guys have a great and wonderful evening. So thank you very much, and see you in the next stream. Take care and goodbye.